Both presidential candidates have proposed this idea of no tax on tips, which has actually received a bit of mixed feedback. Wall Street Journal put out a video critiquing this policy, so that's what we're going to take a look at today.
Former President Donald Trump and Vice President Kamala Harris are both campaigning on this idea of cutting taxes on tips, which many policy experts say
violates some pretty basic principles of economic theory, some pretty basic principles of tax policy. I think you'd be really hard-pressed to find a professional economist who would say that this policy is well-designed.
Experts warn this policy could help employers more than workers, increase the federal budget deficit.
So we care about the deficit now, $35 trillion later.
And even accelerate tipping culture. Here's why. Right now, tips are treated as income and are subject to federal income, state, and payroll taxes.
Income taxes are what we think of as your taxes, the federal tax return, the 1040s. Payroll taxes go toward Social Security and Medicare.
The Trump campaign hasn't released the details of its plan yet. The Harris campaign says its policy would only exempt tips from income tax.
This is actually an important point. If tip income is no longer subject to Social Security and Medicare taxes, then that would reduce the benefit that those taxpayers could collect in the future. So you see how this could become an issue if you have taxpayers who receive the majority of their income through tips, but none of those earnings are going towards building up Social Security benefits. The Harris campaign said that this would only apply to federal income taxes, so tip income would still be subject to Social Security and Medicare taxes or FICA taxes that you see in your pay stub. Now, the Trump campaign haven't made a clear statement on that, but it's worth noting that the bill that Ted Cruz proposed, called No Tax on Tips, refers only to federal income taxes.
This could be, $150 billion over a decade, which is not the largest tax break out there. There's certainly plenty of other things that are just as large. But, we're in a situation where the U.S. is running regular deficits these days, and there's a lot of concern about the country's fiscal future.
So $35 trillion in debt, we can spend billions funding wars that have nothing to do with us. But the minute you introduce the idea of not taxing tip income, then we need to start thinking about fiscal responsibility. Okay. I don't think not taxing tip income is going to be the tipping point.
Both candidates are pushing this tax policy to try to win Nevada, a swing state with the highest concentration of tipped workers.
When I'm president, you are the ones I will be fighting for, and I'll be fighting for you very hard every single day.
But this policy would only be available to about 3% of the U.S. workforce, or roughly 4 million people.
I don't think the small number of people that this would impact is necessarily a compelling point. You could point to several areas of the tax code that only impact a small number of taxpayers. For example, federally declared disasters. People who have damage done to their home through, say, a hurricane can take a deduction for some of those damages. You wouldn't say, you know what, not a lot of people get hit by hurricanes, let's just do away with that. Doesn't really make sense.
And not even everyone in that 3% would actually benefit, because more than a third of tipped workers earn so little that they already don't pay federal income taxes.
The standard deduction is the amount of money that you can make without having to pay any taxes at all.
This could actually change if the Tax Cut and Jobs Act rates and deductions do not get extended. So the tax rates and deductions that Trump put in place back in 2016, they actually end at the end of 2025. So assuming nothing gets done in 2026, the standard deduction is going to get cut in half, and the tax brackets are going to move up for most people.
For 2024, it's $14,600 for an individual and $29,200 for a married couple.
Again, 2026, assuming no changes to tax laws, that would get cut in half.
Tipped workers are also more likely to be teenagers and young adults under 25.
I think a lot of people rightly feel a lot of sympathy and support for people who work in what are, hard, grueling jobs in the service industries. The problem is the policy in practice, it won't achieve what I think we would like it to.
One of the issues economists have with the policy is that it would create unfair imbalances among low-wage workers.
One of the ways to make taxes fair is to make sure that people of the same income level are paying approximately the same amount of taxes. And in this case, you really wouldn't be doing that. So for example, if you took a delivery worker who delivered food, they probably get tips. And so they would qualify for this tax benefit. If you took a delivery worker who delivered packages, they usually don't. So they wouldn't get a tax benefit. But I can't think of a good reason why you would want to give a tax break to the person who delivers food, but not to the person who delivers mail.
Now, that's a good point. There's a discrepancy between two people doing essentially the same job. There are discrepancies all across the tax code. So if you take somebody that pays a mortgage, they can deduct their mortgage interest. And you could take somebody at the same income level paying rent, and they can't deduct rent. Or take two single individual taxpayers, they're going to pay a higher effective tax rate on their income than those two people being married. There's a lot that isn't fair about the tax code that we can agree on.
Tipped workers represent a small percentage of those earning hourly wages, so the majority of low-wage workers wouldn't benefit from this tax cut. Some experts say employers would actually stand to gain the most from this policy. Right now, employers are required by law to pay tipped workers $2.13 an hour in wages. But if workers don't earn enough in tips to get them to the federal minimum wage of $7.25 an hour, the employer has to pay the difference.
This would basically be a subsidy for that part of tipped workers' income. If you create this subsidy, what you do is reduce the pressure to raise wages. It would push more of the responsibility for paying people for the work they do onto the customers directly rather than the employers who are supposed to be footing those bills.
Look, anything that leads to higher wages is going to get pushed down to the customer in the form of higher prices. Restaurants are going to maintain their already relatively thin profit margins, depending on the type of restaurant. So whether that's done through tax incentives or through a regulated increase in minimum wages, those are going to get pushed down to the customer one way or the other.
This leads to another concern, that it would result in a culture of even more tipping. According to a Bankrate survey, many Americans view tipping negatively, and 35% think tipping culture has gotten out of control. Many policy experts worry this tax break would incentivize other industries to adopt a tipped model.
When you give someone a tax break for something, you're really encouraging that part of the economy, right? And as a rule, I don't think we really want to encourage people's wages to be based on things like tips. There's so many ways that we could be helping people in the service industry, and this seems more like a soundbite.
I don't disagree. I do think that this would push people to tip more, and people already hate tipping. But like I said, if we want higher wages for service workers, we're either going to pay higher prices or do it directly. So it's either going to be forced through the prices, through minimum wage increases, or it's going to be voluntary in the form of tips. It's actually caused me to think about tips in a little different way, and I think it's worth this tangent, Tom, for a counterpoint. What are tips? They are gratuity. They are a way to say thanks to that service worker for the service they provided, in addition to the price of the goods and services itself. In a way, it's a gift from the customer to the service worker. And how are gifts taxed? They're really not. You have a lifetime exemption of $13.6 million, meaning you can give away $13.6 million tax-free to anyone, not taxable to you, not taxable to them. And that is sort of one way to think about tips. It's a gift from the customer to the service worker for the work that they did. Let's keep going.
No tax on tips. Do we like that?
There's also some concern among economists that higher income professionals like hedge fund managers and lawyers could structure their compensation in ways to try to take advantage of this tax break.
I'm not really sure how hedge fund managers would swing this. Tips are by definition discretionary, optional, or extra payments determined by a customer that employees receive from customers. Not really seeing a situation where hedge funds would be able to implement this. And I know some service-based businesses allow the customer to tip, but when you're paying an attorney $500 an hour, I think you're going to be hard-pressed to find customers or clients that are willing to tip above and beyond that, to the point where it becomes a significant portion of the attorney's income.
The Harris campaign says its policy would include income limits to avoid these types of abuses. The Trump campaign hasn't said if its plan will include these types of guardrails. Despite these red flags, this idea is gaining momentum in Congress.
I intend this coming week to introduce legislation exempting tips from federal income tax.
Senator Ted Cruz's bill has no income cutoff and would provide a 100% deduction on federal income taxes for any earnings from tips.
I certainly wouldn't expect this legislation to pass standalone. I think you might see it slip into a larger tax bill, and one of those is going to be on the table.
Until a couple of months ago, this was a very low-profile idea, not something that candidates or lawmakers are really talking about. But now that you've got Vice President Harris and Donald Trump talking about it, it's got that kind of bipartisan agreement. We'll push this forward. We'll put it on the table in some way in 2025. It's maybe not the most, pristine, academically grounded kind of policy, but it's a campaign.
Yeah, I largely agree. I think this is mostly a campaign promise that sounds more impactful than it actually is. But for those people that it would impact, it would be very beneficial. So on a whole, I think the benefits outweigh the cons. Just my personal opinion.